Well, good morning, traders, and welcome to followmetrades.com live trading room here on Friday, January 8th, 2021. And I am Dean Jenkins, founder of followmetrades.com. And I will turn my camera on for just a moment, say hello. There's a real person here. Good morning to you. Welcome. And I'm sure glad you took this time and joined here. I run a trading room for my subscribers Monday through Thursday, and then occasionally on a Friday like this, I'll do a special trading room where I'll invite guests in and pretty much do the same thing, and you get to see what it's all about and see if it's something you'd be interested in being part of on a regular basis. So, good morning and welcome. There, I've turned the camera off, so that's not a distraction. All right. So make sure you can find the chat box in the Zoom platform here, so you can ask questions. And as we go along, definitely want to answer your questions. And as we get into this, I'd be happy to offer some analysis on any stock ETF trades that you're interested in. So go ahead and find that chat box. And once you type in where you're calling from, cities, just so we make sure that all works. And while you're doing that, just a quick disclaimer that I'm a trader. I'm not a financial advisor. I'm not giving financial advice. I'm going to be looking for trades, and if I find good ones here, I'll be placing live orders in front of you. But all trading and investing involves risk, and risk control should be used at all times. And I'll talk a little bit about how I approach risk management. But hey, Mike, welcome. Mike's calling in from Dayton, Edward from St. Louis, Troy from Minneapolis. We got the Midwest, kind of covered there. And again, thanks for joining. All right, anybody else? Give them a minute. Anthony from Fort Lauderdale, Florida. Good morning, Anthony. Still morning, even in the East Coast time zone, right? David from St. Pete, Florida. All right, so we got two people from Florida. All right. Well, again, everybody, welcome. And again, I'm sure glad you took the time to join me here. I'll do my best to make sure it's worth your while. So let's take a look at what to expect here. So this is a stock and options trading service that I run in Trading Room. So we're not going to be looking at futures. We're not doing day trading in this room. This is a swing trading off daily charts for stock and options. So I'm going to do a quick market environment scan, just look at what's going on in the overall market. I'll give you a quick view of some of the indicators and my approach to analyzing charts. And you'll see that live as we look for some trades here. Review some open trades that I got going on right now, see how they're doing. And then we're going to be looking for some new trades. I got some candidates here that I've been keeping an eye on, and we'll scan for some new ones. And then throughout this, I'd be happy to answer questions as we go. And again, toward the end, if you've got some ideas, some trades, some symbols that you'd like me to analyze, stocks, ETFs, I'd be happy to do that. All right. So let's take a look at the overall market. What's going on right now. I always like to just step back, take a big picture. I like CNBC. Have a great dashboard. And I just refresh this, make sure we got the latest information. And so, we can see here on the dashboard, the Dow is up 37 points, about 0.12%. The S&P's up about 0.5%. NASDAQ's up nearly 1%. Russell's up as well. Oil is up pretty big, 1%, and gold's getting crushed. Gold had been rallying, and now it has taken a big hit, down 2.68% here, just about half hour after the market opened. It's kind of surprising. I guess everybody's invested. Instead of going into gold, they're going into Bitcoin, right? And Khalid from Dubai. Hey, welcome. Glad you could join. All right, so what's the big headline right now? The job numbers came out, and we've seen a contraction in jobs rather than job growth. Actually saw some job loss, increase in that. And this Forex Factory is a good website just to get economic reports. You can just see here the numbers on a dashboard. So we can see non-farm employment change down 140K. It was projected to increase by 60K. So that was a surprise. Big drop in job numbers, but it doesn't seem to have affected the market. Nothing seems to affect the market, right? It doesn't, the Georgia election goes to the Democrats, the Senate runoff races, Capitol gets stormed, all these things happen, and the market just goes up. It kind of defies reality, but I trade reality, not what I think the market should do based on events. I trade what the market's actually doing. I've learned that that's just a better approach, right? We look at the charts, we see what they're doing, we analyze them, and we trade accordingly. So that's kind of a quick environment scan. Again, overall indexes are all up, and big news was the surprise on the job numbers. I said we're not day trading in this room, but I do look intraday. So I've got a dashboard here. I'm using TradeStation. So this screen, I'm showing on the right here, the SPY ETF. So the S&P 500, 10-minute and then 2 minutes. I'm looking intraday, seeing what the intraday trend is. This is the DIA, the Dow Jones ETF. Now it was up higher and it has drifted down. It's a little bit different trend than we see on the SPY. The SPY opened and then is continuing to drift up. Overnight, the Dow was up more, down, but still positive. NASDAQ is on a bit of a tear, nearly 1%. And this is the QQQ ETF that I'm showing here. So up and away. My main trading takes place on daily charts. And so I'll show you what that screen looks like here real quick. So this is the basic indicators I'm using, my chart setup. Again, this is TradeStation. This is a daily chart. I'm showing Apple here. And you see a few indicators on my chart. The shaded thing here with the price action, this is Ichimoku Cloud. And I've got a unique setup and proprietary approach to using it. If you've seen Ichimoku Cloud before, you go, hey, it's not projected out in the future, right? I've reset it back to current price and I've changed a few settings. So that's Ichimoku Cloud. This light gray line is a 50-day moving average. The heavier white line is a 200-day moving average. And this is a price oscillator showing me momentum and magnitude and direction of momentum. If I were to analyze Apple here real quick, I use a really simple, repeatable version of Elliott Wave. And if you've heard of Elliott Wave before, maybe you're like, wow, that's really complex or non-repeatable. And the way most people approach it, I would agree with you. But here's the basic Elliott Wave shape, right? 1, 2, 3, 4, 5, then a complex correction. I'm just trying to look for 3 for a correction, 4, and then a continuation 5. I just keep it super simple. And it's based on Fibonacci retracements and extensions. And that's all we do. So how would that apply to Apple? I just look here and I would say, oh, look, we got an impulsive move, right? This is obviously a big impulsive move, right? We can see that the oscillator was big there. We had a correction, so I'd call that 3. It is 3, right? This is a correction. This is 4. We got 5 going on. It's that simple. And we would say, we would use a Fibonacci retracement. So we expect a wave forward to retrace into a Fibonacci retracement zone at 38.2 to 61.8. These blue lines, look, it did perfectly. And now we expect wave 5 to extend. This is a Fibonacci extension. And we expect it to extend up into this Fibonacci extension zone. So right now, Apple's working its way up. It's using, Dow theory is a definition of a trend. Uptrend is higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? It's doing that. Trends don't move in straight lines. So we would expect this to, over time, continue up into this wave 5 zone. So that's how I analyze it. This is pulled back. It's starting to head back up. So that might be a valid trade. I've got a few other ones I'm interested in. So I just wanted to demonstrate that, you know, my basic analysis. I can trade wave 3, I can trade wave 4, and I can trade wave 5. So really 3 trade setups there. All right. And again, ask questions as we go here. I'm glad to answer them. All right, so I've got 3 trades open, so I'm going to review how we're doing on those trades. I'm short AEP, electric power, and this one is doing pretty well. All my trades, when I, you know, you can see I've got some different lines drawn here. I've got my Fibonacci retracement, my extensions. I got a target on this thing, right? So when I go into a trade, I actually put just these horizontal lines, and I'll expand it so you can see it. Here's my, this red line is my current stop. And I'm about to trail that down to here, right? I put my stop at low, lower high, low, lower high. So I put my stop on a downtrend at lower highs. This light blue line is where I got into the trade. So I took my entry about 84.74, and I got a target, and it's a green line. My target is down in this Fibonacci extension zone right before this prior low, right, which could be a good support area. So this is where I'm expecting it to work its way down into. And so far I am in 6%, you know, 5.81% profit. If I were trading with shares, I like to trade with options. So, you know, it can be done either way based on that analysis. So my option trade is in a 71.86% profit. And I got into that trade on the 18th of November, and I'm sticking with it. I am long AUI, Yamana Gold. And you can see that's down, and that one's losing just a little bit right now. You know, not every trade wins. And this red line is my current stop. So if it hits that, I'm just going to close the trade, and I'll take a controlled loss, you know, a couple $100. Gold was rallying, and then after the market took off, you know, it's kind of failed. We'll see if it finds support and reverses. At this point, there's no point in bailing on it, right? We're so close to the stop. If it hits it, I won't lose much more. So I'll give it a chance. And then I'm long Zynga, software game company. I'm in 8% profit on this position. The options are at a 38%. And this was a bullish trade, you can see, and the same markup on every chart. Here's this red line where my current stop is. The light blue line is where I took my entry, and then this dash green line is my target. And we are marching nicely up into this Fibonacci price extension target zone. And we're going to stick with it and let it get there. But we got a nice winner happening so far already. So that is really how I go about, you know, analyzing trades, you know, how I mark my charts up, the indicators I'm using. There's one more tool that I use, and it's called Vantage Point. And it's an artificial intelligence piece of software. And what it uses is intermarket correlations. So if we were to take something like Zynga, and bring up the chart here on Zynga in Vantage Point, what they do is they look for, their software crawls the markets and says, what are the top 30 other markets that Zynga is correlated to, either with a negative, which would be green, or a green would be positive, and red would be negative, right? Or no, those are futures stocks, sorry. So they have negative, positive correlations, right? And they go, here's the top 30 things that Zynga has a correlation to. Now, who knows, you know, why, right? Obviously, we would expect it to be correlated with the NASDAQ since it's part of that. But, you know, you'd go, really, NXP Semiconductors? We wouldn't know that. Energy Transfer? Why is that correlated to a software game company? Nobody knows, but it is, right? And so here's the top 30 other instruments that Zynga is correlated with. And then it makes a prediction. So here's the predicted price bar for today. So this was calculated last night at 6:30 p.m. Eastern time. It said, based on what all those other correlated markets did yesterday, this is what they predicted Zynga would do today. It would have a high of 997, and a low of 970. That's this gray price bar predicted yesterday. Let's see what it did today. Kind of did that, didn't it? And it actually went higher. It's at 1014, and that's a win, right? If they predict that it's going up and it goes up higher, that's a win. Right now, it's interesting. They got an indicator. This black line is a standard exponential moving average, right? Standard 3-day exponential moving average. This blue line is a 3-day exponential moving average that is then weighted by the predictions from the intermarket. And so it can show an acceleration below or above the standard exponential moving average. So pretty cool. Right now it showed that they came together, but it's predicted to go up, and this will probably start pulling away. So what's cool here is I can go scan for some criteria for some trades that are going to do something new. And so what I've got some scans pre-programmed here. At first, the whole market's going up, and I'm kind of wondering, is it going to turn down? And maybe there would be something that's already started down. So I'm going to run this scan and go, is there anything that's got a short-term cross down? And maybe there's an opportunity to get ahead of a correction. And I came up with one candidate here, which was Navistar. So let's bring up the chart on Navistar and see what it looks like. And it's, you can see why it's down. It's this red thing's called the neural index. It's predicting lows, but this is really super flat. There's not really a big crossover that you can see. So that's not so exciting to me. So that scan didn't really yield anything. I'm going to do a longer term bearish scan. Let's see. So I'm going to look for what's called the triple cross short. Some longer term predictions going down. See what it comes up with. And there we got a whole bunch. And so I'm going to sort based on how many days since it actually crossed over. You can see some of them were 44 days ago, like Campbell Soup, just yesterday, had a bearish cross predicted. Okay, and we just do a quick look here at the chart. We go, wow, this neural's red, predicting downward momentum. We see some short, long, medium term predicted moving averages all pointing down and crossing this zero line. We see the blue crossing the black, and we see a predicted down move today. So that would actually be a decent short candidate. And I go look now at TradeStation, put that symbol in, and see how the rest of my tools. Did I type it wrong? Should be CPD, right? CPB. So when I look a little longer term here at Campbell Soup, so what this thing went up, back when COVID first hit, there was a big shock there. It's really gone kind of sideways, have it? So in a downtrend, I want to see lows, lower highs, new lows, and we don't really have that yet. So in the very short term, Vantage Point's correct; it's heading down, but it's got some major support levels coming up. So I don't really want to short into those support levels without a real trend change there. And George is asking, what would I accept as a valid signal and price level to short gold? Let's look. I'm going to look at the GLD ETF. Right. So it really is still, what's the big trend on gold? It's up, right? We had this big run up here. This is an Elliott wave 3. We had a correction. This was a wave 4. It made it, close enough to this Fibonacci correction zone. It found support at the 200-day moving average and then started putting in high, higher, low, high, higher, low, high. So it took out a low here. So we got, a couple day price action, low, one move. So I would look for a low, lower high, and then a new low to tell me that, wow, it's going to go deeper into this correction zone. So that it's not so much a price level at this point, George, as it is a price pattern. So again, Dow theory high, higher low, high, higher low is an uptrend. Low, lower, high, low, lower, high, low is a downtrend. And so what I want to see here on gold, we have high, higher, low, high, higher, low, high, right? If this is going to change, I want to see a low, lower high, new low. That tells me we have a real trend change, and the target then would be that this correction is going to continue down into here. So long answer, but hopefully that made sense, George, and anyone else who was interested in that question. Get some coffee here. Hey, you're very welcome. You're very welcome. Okay. So let's go back to Vantage Point. Interesting that food is coming up. Soup, ConAgra Foods here. Here it comes. So everything's negative here. Big down day yesterday, predicted to go down again. Let's go look at that on a larger picture with more indicators. Now, I remember I said I want to see trend change with low, lower, high, right? We got low, right? This is all up, high, higher, low, high. Oops, big low, right? But it's still really just one move. So something obviously changed. I don't know if they announced earnings or something, big news came out, but something obviously changed. This thing just crashed through the 200. So if it pulls up and makes another low, I'd be interested in shorting that, but it's a little early to chase that down just yet. So that's interesting. Something new happened now. Cms Energy. And so you can see I'm using Vantage Point at this point to scan for trades. And it's a helpful tool for that. And once I scan other ways and find candidates, I'll come look here and see what Vantage Point says and whether I like the setup here. So this, this is about ready to cross this blue line. This is predicting a low. These are heading down. That's what we're looking at. CMS. All right. So we do have a series of low, lower, high, low. It kind of went above there. So this, it's a little bit erratic. It's a lot erratic. And it's a pretty volatile thing. And I like things that are a little bit more orderly. And this is the current up move. We're already in the retracement zone. So this might be the end. You can see the momentum coming out. So I'm not excited about that as a short. I do have a couple on my watch list. Let's take a look at them, all right? See if we got any good trades here. We were looking at KNX in the trading room yesterday and about ready to take this one long. Did I get that right? Here we go. So a big day yesterday on KNX. This is Knight Swift Transportation. And, just to show real quick what I'm looking at. Here's the big wave 3. Here's the correction. We're looking for this. Wave 5, 3, 4, 5. Okay. So what would the price target look like on this? We would just throw some quick extensions on. Right. You can see it's got quite a ways to go. If it's going to complete that sequence, a pretty good chance that it will. We got nice high, higher, low, high. It's out of the Ichimoku Cloud. That's good news. It reversed off of the 200-day moving average. We got good momentum down here. Let's see what Vantage says about it. But the intermarket correlations are predicting for a trend here. Survey says. Says today it would be going up. It's green. our moving averages all are pointing pretty much upward and are above the zero. And it said, hey, today you're probably going to have a high around 44.60 and a low 44.07 that we would put in a new high. That's what it says. And that we got a nice cross of the predicted line above the actual moving average line. And so, yeah, there it is, right in that predicted range. So if I were to trade this, right, first thing I'm going to do before I start doing all the work to lay out a trade here is I'm going to check a few things. Okay, first thing I want to know is, hey, when are they going to announce earnings? I don't want to jump into a trade today and then find out they're announcing earnings tomorrow, and that could blow me up. KNX. Earnings Whisper is a good, it's the best database I've found for earnings dates. They got this whole Whisper indicator thing. I care less about it. But they have a great database, and they say currently January 27th after the open is the expected earnings, but this little check mark says that, let me go back. I clicked on the wrong thing. That means it's confirmed. That is a confirmed date as of January 4th. So January 27th, if I were to go long on night, gives me, what, 19 trading days, which probably, or 19 calendar days. It's probably 15 or something, 15 or 13 trading days. It's a little thin, but it's right on the edge of what I would trade. But here's something that can help us is as we approach earnings, if there's a run going on, we can, the shares can run up into an earnings announcement. I'm not going to hold it through the announcement, right? Because new information's coming out, it can blow up, could go up or down. You enter this kind of realm of the unknown. But you can trade into earnings, and there, the trend can accelerate. And if you trade with options, one of the things that can happen is the implied volatility can, there's a rush into earnings where it increases dramatically, and there's a crush after earnings where it gets killed, the IV portion of a option contract. So let's see what the contracts look like on this thing. Okay, and normally I'm going to go out on my options between 60 and 90 days, but hey, they're announcing earnings on the 28th, 29th, what was it, 20-something, 27th, and I'm not going to be holding it, so why pay for time that I'm not going to use? So they have a January 15, which is too soon. They don't have weeklies, unfortunately, but I could use the February and just be out of that thing. And what I would do here, we're long, so we're at current price 44.23, so I'll just go one strike in the money, the 40, right? And IV's not terrible at 41, and we could expect maybe that would continue. The bid-ask spread is pretty tight, 5 to 520. Open interest 2005. So there's plenty of action in this thing. So plenty of volume, good big market. So I'm okay trading this one. Okay. And so that would be my play. So now let me go set my trade up. So where would my stop be? I'm going to drill in a little bit here. So I like to put my stop, high, higher, low, high, higher, low. I'm going to put it under this low. I'm going to get that exact value. On this price bar, which is the low. And that low is 40.64, so I'm going to go one tick below it at 40.63. I'll make that a red line. That's my stop. The red line, right? All right. So I would be entering at current price. I'll just make that my light blue cyan colored line. Current price is 44.25. And my target, I'm going to put my target right inside this price extension zone. We'll just make it a nice round number. We're going to call it 50 bucks. Okay, so it's, you can see the full price target zones clear up to here, but I'm going to be conservative, put it toward the bottom, just a round number. And by the way, I don't close the trade if it hits the target. I let it run. If it's going to run, man, if we tapped into a trend, we're going to let it run. What I'm doing is looking at this, putting in entering my stop and my target, because I want to analyze the reward to risk ratio. I want to see if there's more potential upside if this trade wins than there is downside if it loses. Okay, and it looks like we got about a 1.4, 1.3, or 1.4 to 1.5 reward to risk ratio just by eyeballing the distance from the entry to the stop, entry to the target. But let's do some math, right? Let's be sure here. So here's my handy spreadsheet. This is a long position, so entry price would be 44.25. My stop is 40.63. My target's 50. Okay, so this says my reward to risk ratio is 1.59. That's pretty good. And if I were to use a 2% risk level and I were to trade the shares, right, for a $25,000 account, then my risk management approach says, let's go buy 84 shares. What we're doing is capping the amount. We're not going to put more than 15% of an account into any given trade. So it's saying, yeah, without that 15% cap, you'd be buying 138 shares. That would be 6,100. That's too much of a $25,000 account, too big exposure. So we're going to constrain that down to 15%. So we're going to have you at $3,700. And that means if this trade loses, you're going to lose 300 bucks. If the trade wins at the target, we're going to have 1.59 times that, or about, for high $400 to $500 win. Okay, with shares. Okay, that's how that works. Is that right? Close enough. Now, I'm going to use options on this, and I showed you the contract I like. The reward to risk works pretty much the same way, right? If we go down here and hit this stop, I'm just going to close the option, sell the close. If it goes up here and we get into the win, it's going to have a big win. And I just use kind of the same rule of thumb, 1 to 2% of the account into the option, right? So I'm gonna base my trade on a $50,000 account. I'm gonna see what the options cost. Well, we already know what the options cost, right there. They're 500 bucks. I'm gonna trade 2 of those. Okay, I'm gonna trade 2 options, and what I'm gonna do is go ahead and take this trade. I'm gonna get my. I'm gonna use the Schwab account here to place the order. I do my analysis on TradeStation. Sometimes I trade in TradeStation, sometimes in Schwab. Just depends on, what the capital situation is. So I am firing that up. I'm going to take this trade. Again, I'm not a financial advisor. I'm not giving financial advice. All trading and investing involves risk. If you like this trade and you're going to take it, that's up to you. I totally suggest you use risk management, right? So here's my Schwab account. Let's do here KNX. And I'm just going to do a straight call. I don't really care for spreads. We said 45, right? 40. Buy to open to. Here our bid ask is really nice and tight. So I'm just going to put my limit at the 520. If it was wider, I would do a little different thing. So I'm just going to do 2, the limit of 520. This is a live account. We're going to see if we get filled here. Place the order. and we got filled at 507. Okay. So that is now in my account. Somewhere, there it is, KNX, 2 contracts. Okay, there we go. I found a pretty decent trade. And that was one that I was watching before, and I like it. I just wanted to check in today, and now I'm going to send that one out to my subscribers. As soon as we finish this trading room today, they will get an alert with all the trade parameters, the stop, the target, the contract that I'm using, all that kind of stuff. It's pretty much that easy. All right. Let me pause. Any questions you guys have at this point? And are there any symbols you would like me to analyze? Be happy to take a look. I will apply my analysis, my thoughts. You know, finding a good trade is hard, and you know, they're rare, right? There's 8,000 or so publicly traded stock symbols in the U.S. markets and a whole bunch of ETFs. Right? They're not all good at any given time. Okay, I don't see anything coming in at this point. Let's check in on what's going on with our indexes. Pulled back a little bit, didn't they? The Dow went red. How about that? NASDAQ is still in the green. S&P 500 is still in the green. How are my other trades doing? Okay, AEP, I'm short, it's still down. Zynga, I'm long, it's still up. Gold, still under pressure. Sure. All right. Okay, well, that's kind of how my trading room works. You know, we do, like I said, we do the environmental scan. We go look at what's going on with the indexes, the major commodities, what's the big news coming, what's driving the market, and then we look for individual trades. We manage the open trades. We look for new ones, and when we find new trades, we take them, and then I send the alerts out to the rest of the subscribers. You know, you don't have to join the trading room to be part of the stock and option pick service. Alerts go out via email, and I have a dedicated app that does push notifications, so you can get notifications on your phone if you like that. All right, Khalid would like to look at Sony and APHA. Sony, I believe, is SNE. All right, up and away, right? So this is the ADR. Sony's obviously in Japan. So depository. You know, it's just been this long uptrend, you know, a minor correction here, but this is a very mature trend. So you can see the momentum is starting to come out of it, that it's mature. So I would not try to chase Sony up at this point. It could continue, but it's losing momentum. And so I would not be going long. You know, it's just too late for me. And it hasn't shown any signs of a correction yet, so there's no sign yet to short it. So for me, there's no trade on Sony. If I were in it, I would stay in it. I'd have my stop up pretty tight up, you know, up under this low, and just keep trailing my stop up as it puts in these minor support levels. APHA. Okay, so this one did, you know, it's a little choppy, right? You can see it's like a big sawtooth, right? Big uptrend that did have a correction, then it started heading up. Now it's giving it back, and this is Afria. Is that a pharmaceutical of some kind? I kind of think it is. If it finds support, so you see this gap up, there might have been some news, you know, on a product or earnings. If it comes down and finds support, reverses, there may be a new long, and that would give you a wave 5 zone of pretty high. But I really want to see some good evidence. I want to see it find support and then really have a strong reversal, and then you could have a target up into here above, you know, $11 or something. All right, David said just signed up with Vantage Point. When he runs a scan, he gets a whole bunch of stocks. Any advice on what to look for the best trades? In Vantage Point, I have a bunch of defined IntelliScans that I've defined over the years. See, I've got a handful of them here. And for my customers, if you sign up for my service, I actually have these in a secure area of the website. You can download and use my scans that I've got defined. So that is available for my customers. So let's talk about, what if you want to become a customer? What does that take? What does that look like? I've got that answer for you. Okay. Let me find the right slide. All right. So if you would like to sign up, got a special offer for you. It's you can try my stock and option picks, which includes the live trading room Monday through Thursday, 30 days for a $37 trial, right? And then it's $97 a month after that. That's a 25% discount off the list price on the website. That's 100% money back guarantee. So you can try it for 30 days. You get to day 29, you go, yeah, not a fit for me. Just ask, I'll send you a refund. No questions asked, no hard feelings. I want people to say that if it's a really good fit for you. We put that link in the chat box for you. And during that trial, David, you're welcome to get my IntelliScan files and check them out. So there's a link in the chat box. Again, it's a pretty good deal, $37 for 30 days. Check it out. As a bonus, I talked about I use the Ichimoku Cloud, a unique set of settings for that. So if you sign up for the trial today, I'll include my Ichimoku Cloud course that has my settings and all the rules about how I use it. That course lists on my website for $247. I'll include it as a bonus for free during this session if you sign up with that link. And how does the service work for everything you get? I post a watch list of trades that I'm looking at on our website. You get to see those, and if you're in the trading room, you obviously see it real time. I send out alerts when we have a new trade. So as soon as I hang up here, we're going to send an alert to the subscribers for that new night trade. And I send the alert via email, and then it's not a text message anymore. It is via my new app. So iPhone and Android, we got an app that does notifications, works really slick. Exact details of the trade, entry, stop, target. Most of them can be traded either with shares or with options, your choice. And I always provide the contract details. Alerts via email and the app if I make a change, like moving the stop, taking profit, closing the trade. You got access to the trading room Monday through Thursday, similar to today's session for the subscribers. It's a half hour right after the market open. You can attend if you like. It's not required. We do recordings and then a recap at the end. So what happened in the trading room? We do a 1-2 minute recap. You just go watch the recording. We also do a weekly live chat Wednesday evenings for those who are, can't make the morning sessions. It's at 6 p.m. Pacific time, 9 p.m. Eastern. I offer a one-on-one consultation. When you sign up, you get a link. You put time on my calendar and we can answer questions, get acquainted, and get you off to a great start. And I provide some tools for risk management and some option trading tools and training as well. So you can use the service and apply my risk management ideas. And of course, ongoing support and training. All right. If you're wondering, wow, that's interesting, but who is this guy? You can find out more. You can go to my website. It's followmetrades.com. And so I've got quite a bit of information about me and how the service works. If you look at the bottom of every page, it's going to make me, is it not? Where'd it go? Oh, here it is. I am listed with the Better Business Bureau. You can click on that. Got an A+ rating, and there's a bunch of customer reviews here, and they are very positive, and I've never had a complaint at the BBB. Okay, well, yeah, BBB is a pay to play. You know, how legit is that? There's one more place you can look if you are skeptical, and it is called tradingschools.org. So tradingschools.org, if you haven't heard of it, this dude, Emmett Moore, he reviews trading educators and service providers and stuff like that. He's got a really colorful backstory. He was like the Wolf of Wall Street dude, went to prison, and now his mission is to expose other frauds. And he does. And like, you know, the big story was Raging Bull, Jason Bond. These dudes are in big trouble. And so he goes and reviews all the trading folks that you've ever heard of or not. And 95% of these reviews are just scorched earth and negative, and he exposes frauds. He has reviewed me 3 times. You can search here. And I'm one of the few providers that gets 5 stars, 4.8 from Emmett. So you can go read his reviews. Okay. David says he was signed up for Raging Bull. They've been charged by the FTC with fraud, and all their assets have been seized. So I'll just leave it there. Okay. So any questions? I got the link, if you're interested, is there. And I'll send an email out. We're recording this. I'll send an email to the, with a link to the recording. It takes a couple hours to get it rendered and uploaded. And you can watch again if there was something you wanted to see again, or, if you were multitasking, didn't catch it all. But if there's no other questions, I'll go ahead and wrap it up. Thank you again for attending, for your interest. Hope you found it helpful. Let's see how our trade is doing, right? KNX. I'm going to be in this thing up until earnings, but you like it to take off as soon as you get in. Mike, hey, you're welcome, Mike. Thank you. Edward, you are welcome. How's the overall market doing here? Let's look at the intraday. So there was a little bit of a shock. It's all coming back. It's funny how these all move pretty much together, huh? My gold trade was it was getting kind of threatened, but now it's heading back up, so that's good. We got really close to getting stopped out there within a tick or two. Yes, some trades right. Hey, Khalid, thank you. Okay, well, I'm going to go ahead and wrap it. I don't see any other questions. I'd love to have you join the service if it seems like it'd be a good fit for you. If not, that's okay. But I do webinars and stuff like that occasionally. You'll get invitations, and love to see you either in the trading room or at a future webinar. Either way, hey, trade safe, keep your winners big, your losers small, and have fun, right? Trading should be fun. If it's stressful, you want to step back, figure out what's going on. All right. Catch you down the road. Thank you very much.